Hello, this is Dean Malone with Compass FX. In this video, I want to share with you something special about the Trader's Dynamic Index, something that has always been there, but you may have overlooked. As a matter of fact, some traders have often said this is the hidden secret within the Trader's Dynamic Index, and they often look for this one specific thing matched with price action to help them make better trades. So, get your notepad out, take some good notes. For the next few minutes, I'm going to share with you what's often been referred to as the hidden secret within the Trader's Dynamic Index. What we want to look for on a 30-minute, 1-hour, or 4-hour chart is the green line of the Trader's Dynamic Index breaking out of the blue volatility bands as they compress or squeeze down closer and closer together. This is a sign that the market is congested, not sure which way it wants to go, and therefore we're looking for a breakout. And interesting enough, with the Trader's Dynamic Index being a representation of market sentiment, what we want to do is if we see market sentiment breaking out, we simply want to align the sentiment of the market with price action. If both are saying the same story or speaking the same thing, then we want to take that trade, which is most likely going to be a higher probable trade. Now, with the pound dollar 1-hour chart that we have right here, we have two of those situations going on, or three of those rather, going on in this chart. Let's first take a look at this one right here. We can see that the blue volatility band here has risen up, and this one at the top has dropped down. We can also see that the market has gotten real congested right here, not sure which way to go, and that's also representative of the average price bars, getting inside the price action channel right here, not sure where it wants to go. And what we want to look for, the hidden secret here that traders are looking for, is when that green line breaks out of the blue volatility band after the blue volatility bands have compressed down. Now, this is often referred to in some areas as the squeeze. We're looking for the squeeze of the market. When the market squeezes down, compresses, because market congestion gets really tight. When the market tightens down like that, we generally look for a strong breakout. So again, what we want to see is we want to see this in our indicator here, and then what we're going to do is we're going to do a double check. We're going to come up here, we're going to look at our price action, and we're going to look for an HA close breaking outside the price action channel. When we have this and this saying the same thing, then we're in a higher probable trade situation. Let's take a look at another example here. I'm going to come right over here, and you can see that right here we have a situation that's going on right there. You can see that where this is breaking above right here, the market more or less got congested right in this area. Not sure where it's going to go. Now it breaks above, and right where that break is taking place, we can see that the price action the HA close is breaking outside or breaking above the price action channel. That's another sign of a high probable trade. Let's take a look at another example that we have on the chart here. You can see over here that the market got congested here, back and forth, and we had a little bit of a break above, but not very clear right here. Then it came back down, and then here's what we're looking for. Again, remember our rules. Green line we want to have that green over 50, over red, and over yellow. Well, when we get the green over 50, over red, over yellow, and over the blue band right there, that right there matched with the HA close coming outside the price action channel right there, we're in for a higher probable trade situation. Okay, let's take a look at a few other charts because I want you to know that this happens over and over again. Let's take a look at a chart that really some folks say there's not a whole lot of movement in that pair, and that pair is the New Zealand dollar. Sometimes it has low volatility, not much. Let's go over and take a look at that. Well, here we have the New Zealand dollar 1 hour, and we even have these situations occurring again and again. Here we have a situation the market is being fairly congested right in this area right here, but look what happens right here as we break above the blue volatility band, and the market did squeeze down sort of in this area, not as much as it did way back over here, but you can see right here as the blue volatility band has been crossed over by the green, if we go straight up, you can see more or less what we're looking for. And here's an entry point right there, right in this area, right there is an entry point on the New Zealand dollar in this instance. Now we have some other ones here. Let's take a look. We have a situation right here where it did it again. Green line breaks the blue volatility band, and let's measure this up with price, and you can see what's happening here. We have the HA close coming outside the price action channel, and we have a nice trade to the downside. Now sometimes they're not as strong and not as nice as this. You can see that right back here, okay, it was trying to break above, and this got real choppy here. The main thing is this, is that right here where it broke, right there, were we above the 50? No, we were not. Again, what you want to look for is you want to look for that green line above the red, above the yellow, above 50, and it's above the blue volatility band. So if I look at this, go straight up, we have a situation right here where this was choppy, not that good, but as soon as we cross that blue volatility band, you can see that we have a little bit better movement to the upside. Still kind of back and forth, but all in all, fairly decent move up. And on top of that, this is really a counter trend trade. You can see how the market is more or less moving to the downside. Okay, let's go take a look at another pair, and let's go take a look at the pound yen, for instance, and let's go down to a 30-minute chart just to give you another look, another perspective. And here on the pound yen, as a matter of fact, the pound yen had a beautiful double bottom setup here. You can see that here when we take a look. You can see how the market dropped down to a level, then went up to a midpoint level here, dropped back down to about that same area, and then on to the upside. That is what we refer to as a double bottom setup. Okay, but what we want to look for here is a breakout again of the green line breaking above the blue volatility band right here in that situation. And let's take a look at this. Green's above red, above yellow, above the 50, and it's above the blue volatility band. And look what happens here. You look straight up, price action is breaking. We have a beautiful move right there. Now back over here, it got a little choppy back and forth. But again, when we break here, we broke right about there, and it attempted it right there, but it wasn't a really clean break. So what we want to look for is a true break of it, and then let's see what's happening with price action. You can see the price action is pretty well in line there. Now, there's a couple of rules I want to make sure you understand here, and these are the rules we want to look for. Back over here, notice here that when we crossed above the blue volatility band, we were between 68 and 50. So when you're going long, you want the green line above the blue, above the red, above the yellow, and above the 50. That's key. Now when you're going short, it's just the same, but what you're looking for is that when you're breaking here, you want to be between 50 and 32. You want to have that break happening then. So in this case, green is below the blue, below the red, below the yellow, and below the 50 mark. Those are the areas, because when you get below, generally when you get below 32 or you get above 68, what generally happens is you're getting to areas of overexhaustion. And what we want to do is more or less like what some people refer to as an overbought or oversold situation. Now, can the market continue to run down? Absolutely, the market can continue to run down. That's a given. But what we want to do is this. If we are entering the market between 68 and 50 for a long, or between 50 and 32 for a short, if we can see this setup happening on a short or this setup happening on a long, within those areas, there's a lot of strength, a lot of momentum generally going that way. So folks, I hope this video will help you identify those. They're all over. Look for this in multiple charts. Look for it again in the 30-minute, the 1 hour, and the 4 hour. Be patient. Wait for those setups. And when those setups occur, if you did nothing else but look for those setups time and time and time again, you're going to probably have yourself a lot more favorable trades in the long run. Well, folks, this is Dean Malone with Compass FX. Take time, review this video about the hidden secret of the Trader's Dynamic Index, and rest assured, I feel pretty good that you're going to find yourself with more and more favorable trades. Y'all take care. I'll see you next time. Bye-bye.